Hello everyone. Welcome to Fisk Capital's Unlisted Share Analysis series. Today we are talking about a share which is in the renewable energy or green energy space. Its name is Apollo Green Energy. The reason we are interested in talking about this particular stock is this is one of a hot stock in the unlisted space. It is in green energy segment and it has recently come with a private placement. So let's dig out deeper to understand whether this share is really that attractive for you in your portfolio or you can skip this one. So here we are discussing the equity research report of Apollo Green Energy created by Fisk Capital. You can get this equity research report and even more research report from us by directly contacting us. The details are also in the description of this video, and you can also reach out to us via comment section, or you can visit our website and from there you can get our contact details by chatting us on WhatsApp. So these are the ways to reach out to us. Now coming back to our topic, Apollo Green Energy is basically a green energy company, but this wasn't a green energy company forever. They were previously known as Apollo International Limited. It was rebranded as a Clean Energy or Energy Limited company to show their strategic focus on clean energy, EPC and supply chain trading. Now they are working in the business where they are in a high growth renewable energy space, an infrastructure company which is working in full scale projects like solar power, hybrid power or clean energy hydrogen. Some basic historical detail about the company is that it was founded in 1994 as Apollo International, and in 2023 they have rebranded themselves as Apollo Green Energy. The business model, as I said, is diversified. Though they are in clean energy and green energy, they are also an EPC player and does some sort of supply chain and trading business. Recently, they have done a fundraising of 4,000 crore plus through a private placement. This fundraising is going to be utilized to fund their green energy projects. They already have an order book of around 10,000 crore in green energy space. So post this private placement, we have done some analysis and their value has come up to 416 rupees per share. However, I would suggest you to let us go through this video fully to basically understand whether this 400 rupees price is justified or it is too much. By the way, the price of private placement was around 300 rupees. Currently in private market, the share is trading somewhere between 200 250. In unlisted also, the price changes regularly. So whatever I am quoting right now is not going to be the same when you may actually go on start buying for this. So looking at the businesses of Apollo Green Energy, they have three business division. One is renewable energy, solar, hybrid and green hydrogen. They currently have 400 megawatt capacity in solar project. They are also expanding into wind energy, battery storage and green hydrogen. So they have an investment plan of 500 megawatt solar module manufacturing plant, which is a new investment. Similarly, in APC, they are already a player. They are also expanding into power plants, infrastructure and water distribution projects. Right now, they have some projects in India, Lesotho and Tanzania. The total revenue contribution is currently 48% of their total revenue is coming from EPC. So let's see how it is going to go in the future. Mostly it will be reduced and renewable will take place as a major contributor. In supply chain and trading, they basically are the trading company of Apollo Tires. They are also expanding in batteries, mostly lithium ion batteries and commodities. So they do this like sell Apollo Tires to the international market. The revenue contribution is 38% from this segment. They had an 80% YOY growth from commodity and battery trading. So that's a space where they can grow even in supply chain and trading part. They are now constantly increasing their footprint in EV battery ecosystem from the traditional battery of lead assets. Now they also had a fashion division. Now this is a 174 crore FY24 business, which is degrowing, and they are entirely focusing on the high growth sector. That's why they are going to divest this one. That's why we are not covering that particular part. Looking at the industry of renewables, they have India's renewable energy goal is to have a 500 gigawatt power by 2030. So you would see a lot of big players like Tata, Adani, even Mahindra and all these players are coming in renewable energy space, and there are many young and new players like Apollo is also there. Then the industry itself is growing with 18 to 22% CAGR. So if Apollo even lags in the growth, still they can make 15 to 18% for sure. If they can become a leader in this industry, or at least one of the fastest growing company, they can even surpass 25%. Then there are also some benefits like solar PLI schemes, green hydrogen mission, which can give them more incentives and improve their bottom line, means profits. Looking at the EPC segment of the company, the growing demand is there for sustainable infrastructure. This is also increasing 15 to 18% globally and 12 to 15% in India. And Apollo Green has an expansion in infrastructure space, and they already had like projects in Tanzania, Lesotho. So they can take even global projects. They are not just limited to India. That's a good thing about this company. Looking at their batteries and supply chain segment, EV market itself is growing at 35% CAGR. So there is a high demand for lithium-ion batteries and energy storage, and Apollo Green's entry in EV batteries and international commodity trading is going to help them in getting a high growth business sooner, and they can grow faster, both on the revenue side as well as on the profit side. If you look at their profit financial overview, you can see that in last year itself, their renewable energy and EPC segment had grown by 108%. The profit was 48 crore and revenue was 593 crore. Supply chain trading had a 469 crore revenue, growing at a 80% YOY growth. Fashion division actually de-grow by 16.4%. Revenue was 174 crore and segment profit was 13 crore. So overall, they had a 1234 crore of revenue. Segment profit was 100 crore. YOY growth was of 64%. So a quite a high growth rate. However, the valuation market cap is not just about this FY24 number. This shows that they are growing and they had a solid base. But now they have gone for a much bigger size of investment. They have raised 400 crore rupees from a private placement, which is about 4 times of their last year revenue. Therefore, we have to understand where this investment is going to go up. So one is 500 megawatt solar module manufacturing plant in Madhya Pradesh, which we are expecting to be costing around 1000 crore. This will improve their supply chain of Apollo's own solar project. They have a solar module manufacturing from their own place, so there will be a backward integration. They don't have to go to anybody else, any other vendor to buy a solar module. They can build it on their own and then supply it to their solar projects. And this is one of the key things which can even further improve their profitability. Then there is renewable energy expansion, solar, wind, green hydrogen battery storage, where they are expecting 25 to 100 to 3000 crore of investment from this money. They are obviously scaling the existing 400 megawatt solar projects. Second is they are entering in this 2-3 different segment in renewable as well as in the battery storage and battery creation division of lithium ion batteries. So that's a positive where they are spending heavily this 4000 crore rupees. And then they also have some plans of IPO in 2025 and some strategic reserve.
Are you tired of losing money in stock market? Buying at the top, selling at the bottom, following random tips and losing money? Well, stock market looks very easy, but smart investments require experience, strategy and discipline. At Fisk Capital, we help you invest in the right. We provide research-backed recommendations, tried and tested strategies, and personalized investment plans. From small investors to big investors, from retail to HNI, all our clients trust us with all their investments. So the question is, are you going to rely on the guesswork or are you ready to start investing with expertise? Contact Fisk Capital at the below given number and start your investment journey now.
This is basically going to use to give a very strong revenue acceleration for 3 to 5 years. Looking at their growth, stability wise, they can grow at a normal pace and still give you a 3000 crore sort of revenue in 2027. And then it can increase up to in 2022 to 356 crore, which means that their profit can grow 7 times by in the next 7 years. However, if we look at their DCF valuation, free cash flow, as we can see that there is already a very high capex and future cash flow of this 4000 crore investment is going to be much different from what they got at a kind of market cap of 500 crore. So that's why we did a EV from adjusted DCF, which came around 6709 crore. If we just look EV by EBITDA multiple of 10x, then it is about 10,009 crore valuation, and therefore their value per share from our estimate should be between 393 per share to 416 rupees per share. This is our analysis. Obviously, if you are getting it at a 200 rupees rate, which is much lower than 300, then in all valuation probability, you have a very good upside, 100% about even at the current level. And if you hold it, IPO is done and the company is going to get really good growth, which they are projecting and we are projecting, then it can even surpass 600 rupees later on. So in 3 to 4 years, you can get actually 3 times of your money. Thus, we are suggesting that if these numbers are really that great and they actually going to continue on this part, then this is a very strong buy from our side. We think Apollo Green Energy is an undervalued company at the current level, and with this significant upside in 3 to 5 years, they can give you 2 to 3 times return for sure. However, there are many risks associated with Apollo Green Energy. One is obviously a liquidity risk because this is an unlisted share. So you can't sell it anytime at any market rate you want. You first have to find a buyer who can take the shares from you. And currently, since share price is going down, there is less chances that you will get a higher price well before IPO. Also, after IPO, there is a 6-month lock-in period. So you have to assume, like, if even if it take 1 year for unlisted shares to become an IPO and 6-month IPO lock-in, then at least 1.5 years should be the horizon. So if you just want to invest for 2.5 years to 3 years, then only I would suggest that it is a good thing, especially from the liquidity point of view. Otherwise, you may end up incurring losses here. Second is execution risk. So they have EPC solar project, they can get delayed. The government contracts which they are getting, they can also get delayed, and there are also high competition. So that's why there is a chances that some other player may win the deals and they end up with less and less projects in their book. So order book may or may not increase that significantly, which we are expecting. And then there is also a risk that the green hydrogen and energy storage space is quite nascent in India. So they may also mess up in some of their planning and can incur huge losses because of this projects. This risk of execution is already there, but the good thing is that they are not just dependent on one of the areas like green hydrogen or energy storage or renewable. They are in almost all of them, and then there is supply chain and trading. So that's why if one of the area doesn't perform well, then also they are fine. They have a problem only if multiple areas started doing poorly for Apollo Green. And the third risk is obviously regulatory and policy risk. The company may get affected if government change their PLI scheme on solar and green hydrogen and they don't give as many incentives as they are providing right now. Then also there will be import duty, tariff war, which we are seeing in US. So all these things can also affect the regulatory issues. So the best thing is that Apollo Green is already using a lot of fundings from private placement and IPO. Thus, it is not a very big concern that government may not support them monetarily, because they are funding on their own. And also the government focus is on the future, on the renewables. So chances of renewable getting underfunded is less unless you get somebody like a Donald Trump at the table in India. Again, the competitive risk. The established players are quite big: Adani Green, Tata Power, Renew Energy, then there are Wari and all those big players. And therefore, it is difficult for Apollo Green to get their contracts very easily. They also have to fight tooth and nail. However, there is too much of the work to be done in this area that all these players can thrive without competing on cost with each other a lot. So that's the benefit. Plus, they have a niche strategy. They are focusing on EPC, green hydrogen, battery storage. So a slightly differentiated model, not exactly competing with Tata Power or Adani Power, Adani Green Energy directly in the segment. Then there are obviously debt risk, but if you see that their debt is 578 crore and they are having a private placement of 4,000 crore. So that way, and then there will be an IPO. So in this way, they can actually completely remove the debt part of it and become a low debt or zero debt company. So thus, I think it's good if you go ahead and buy Apollo Green Energy. If you have any question, you can ask us. If you want to buy it from us in unlisted segment, then you can reach out to us. We have already shared our contact details with you. You can contact us at 903-918-4797, or you can mail us at sales@fiskcapital.in. As I already mentioned, you are looking to get this report for your personal analysis. You can directly email us or contact us to get those details, and we will be happy to share this with you. If you like this video, please share with all your friends who are looking for such analysis, and do share your thoughts in comments about this analysis, and will you be interested in more like this. Please let us know if you have any question on this analysis or anything else, and also share your suggestion on what we can do to further enhance our videos like this, as well as to get more content which is more useful for you. Thank you very much.